We will have incredible SaaS companies coming out of India. We like to tag unicorns as a success metric, but yeah, we will have phenomenal companies coming out of India in the next decade, building SaaS not only for America, which is what we've done all these years. You will see SaaS for India, you will see SaaS for Asia, you will see SaaS for emerging markets, all coming out of from India, and very high growth and scaled companies. I'm particularly confident that this will happen.
Hello and welcome to the Startup Operator Podcast. I'm Roshan Karyappa. India's SaaS ecosystem is heating up. There's just so much optimism in the space that it's hard to imagine even a decade ago, there were hardly any successful SaaS startups. WebEngage was one of those rare few, and their journey is a story of innovation and perseverance. I spoke to Avlesh Singh about the various pivots that they've undertaken and milestones that they've had, and also how the Indian SaaS ecosystem has matured in that time itself. We also spoke about WebEngage's startup program and Avlesh's principles, tips, and hacks for building a successful SaaS business. This was a fascinating conversation, a lot of learnings, insights, wisdom packed in here. So let's check out this episode of the Startup Operator Podcast with Avlesh Singh.
Hey Avlesh, welcome to the Startup Operator Podcast. Thank you so much for making the time.
My pleasure. Thank you so much for having me here.
Yeah. So as a SaaS enthusiast myself, I've really been looking forward to this conversation. WebEngage and your journey is super inspiring. So maybe let's, take it all the way back, right? So let's talk about the founding journey. If I remember correctly, I think you didn't start with the WebEngage idea to begin with, or you had something of an Evernote kind of product. And there's an interesting journey you went through actually figuring out what people will pay for and then arrived at the first version of WebEngage, right? Could you talk us through those early days?
Yeah, no, it's been a long journey. First of all, hello everybody, and I'm excited to do this. I'm hoping that some of the insights that I'm going to share in this podcast is going to be of use to you. To set the context, WebEngage has been around, and we completed 10 years this October. So long journey. A lot of our commercial success, however, has been in the last 5 years, and a lot of people know us today because of those 5 years in the journey. But yeah, as folks like yourself, you have kept a very long track of us. So let me go down the memory lane and share some of those pivotal parts of our journey. Two big pivots have happened in our 10-year journey. The first one, as you highlighted, the company, funny thing is, we are called WebClipper Technologies. The company is not called WebEngage. And this stemmed from the fact that we were originally, when we started out, we were a clipping tool. And there's some backstory to what that really was. I was the very first engineer at this consumer startup called Burp, BURRP. Some of you might be aware. This is before Zomato was a thing. We're talking about 2006-7 period, when it was not mainstream to find great consumer tech companies, consumer startups. Burp was a phenomena during those days. While it wasn't a great commercial success, all of us wished that it were, but it was a phenomenal journey for me personally and a lot of other folks who were a part of the early startup team at Burp, and a whole bunch of them went down to create their own companies, their own startups over a period of time. So yes, great deal of learnings there. To connect the dots, I was an engineer at Burp, and finally 4 years into the journey, Burp got acquired by a Yellow Pages company called Infomedia 18, which was a part of the larger Network 18 group. And when that happened, Infomedia had very aspirational product in mind to compete with Just Dial. And Just Dial was a huge revelation at that point of time, right? So they wanted to build a Just Dial competition. Me and my team, we were tasked to do it, build the product out. And to do that, the team had to be built. Burp team was very small. We were very scrappy throughout our journey. But then at Infomedia, we had to expand the team because the ask was to actually build like a very solid competition to Just Dial from a product standpoint in a very short span of time. So we did expand. A whole bunch of engineers were onboarded. And we started experiencing problems that we never had at Burp, right? It was a very small team. Sharing knowledge, information was very easy. And now you're trying to build something at scale and you've hired a lot of people. You tend to commit the same sort of mistakes, right? Too many people, and you sort of reinventing the wheel all the time because there were too many silos building different parts of the product. So out of sheer need, I ended up, forcing my team to run a lot of documentation. I'm an engineer by trade, right? Just to set context. And so is my other co-founder. My other partner, Ankit, was also a part of the Burp team. So, that's how long we go back as founders, now you can call. But yeah, as people who work together, we go a long way back. Now, what I ended up doing there was forced a lot of documentation amongst engineers, because that was one of the biggest problems. You had a lot of code, but you had absolutely no idea what it does. and that leads to a lot of issues. So there was a lot of forced documentation. Turns out that was not enough either. So we ended up converting that into what used to be called Java docs in those days. I don't know what is the fancy thing these days, but these are a web version of all the tech documentation for your product. Now, in our case, it was all to be consumed internally. This was not for an external audience, but nonetheless, we had Java docs, as we used to call them, and the expectation was that if you are hiring in new engineers, they would spend considerable amount of time going through those docs and getting a grasp of how things work, so that they don't make the same mistakes or reinvent the wheel. Well, turns out that was not enough either, because nobody was interested in reading, no matter how much it was enforced, right? So out of just sheer need, what I did was I created a small browser plugin. This is Firefox days, right? Mozilla was a thing. Now it's all Chrome, but we're talking about Mozilla back in the day, and I ended up writing a Firefox plugin for internal consumption, which basically was for me and my team, my leadership, to highlight things that matter in that documentation, because the documentation will run to hundreds of pages. Nobody, we realized, was reading through all of that. So we started highlighting pieces that they should read. That was a one-time job. The tech leads were supposed to do that. And it became like a short summary of, let's say, 50 points to remember, or 100 points to remember, if depending on whether you're part of the UI team or the backend team or, the search team, etc. Those were highlighted using the plugin in the documentation. This was a highlighter tool. And then in the same tool, there was a way for you to sort of archive this in a one place, so that people could just jump on. Instead of reading through the whole documentation, they could go to that archive, read through the 100 points that they're supposed to go through. When they click on those, they go to the respective places in the original web doc and read the full thing depending on their interest, right? This was as people started using it, people liked it, and a lot of people internally, they encouraged me to just put it up online because they thought it was useful for others too. So I put up the Firefox tool online, which was a plugin, which was nothing but a plugin. And funnily, it actually started getting downloaded and people started using it. I had about 25,000 downloads, which is when I said, maybe there is something, and maybe I should do more around this. Maybe people need this. That was the first time I actually discovered Evernote. I never knew of them I never used as a user, never had the need. And I started discovering all these tools. And then, the core idea was to put together a web clipping tool, and something that allows you to basically sync your notes across different devices, put them in one place. You have easy access to those from wherever you are. You could use it on the go, on the web, etc. So, I jumped into it and I said, okay, let's do something. We have 25,000 users and might as well, build something that they find useful. And most of these were, people from outside of India finding different kinds of use cases, bunch of lawyers, a whole bunch of professors from different universities, students in those universities. So it was very funny. I was not able to make sense of what they're doing, but yeah, I knew that they were doing something. So yeah, that's how the journey started. I spent some time, 5-6 months. I left Infomedia, spent 5-6 months by myself trying to build it out. And when I had sizable traction there, Ankit used to help me a lot on many aspects. One of these days I just told him, dude, shit is getting serious. Let's get started. Ankit is like, yeah, sure. Why not? It's not that, it's fun to be there anyway. So let me wrap up whatever I'm doing, maybe a month or two. And then I'm going to be here. Jump ship and let's see what we can do. And we got a couple of other guys, some of our ex-Burr people only. We had very good rapport there. We started building it out with 3-4 guys and spent good 5-6 months, Roshan, building out the core capabilities, started figuring out what Evernote really was, what the world was doing, what Evernote was doing, and started sort of making it nicer, better, started supporting a lot of document formats. It started as web only, and then we started doing clipping on images, clipping on PDF documents, etc., making it more sort of reaching to a wider audience. So all of that was happening, and the funny thing was I was running out of savings. Not that Burke made a lot of money for us. We had to figure out how to make money. Either you raise capital or you sort of start monetizing this. And sooner or later, because I was running out of my money. So raising capital, it was a disaster. We have never been great at it. So, there was not much interest. And we are talking about 2011 period, right? So it wasn't all hunky-dory as it is right now. So we had our own struggles trying to pitch that idea. Nobody believed in that idea. So zero interest on fundraise, which meant that we had to go to our users and ask them to pay. So I still remember that night. We worked for 2 days, started creating pricing tiers, moved a lot of features premium. And premium meaning some paywall and $9-10, right? That's all we were asking at that point of time. They said, paid tier gets you everything. Continue to have free tier, which will have some of the basic capabilities. And we sort of figured out the whole packaging and shot an email to users saying that this is coming now. So the free thing will be only having these capabilities, and the premium capabilities will move to a premium plan, and you'll end up paying $8, $9, $10 a month to be able to use that. Boy, disaster. So most people didn't respond, of course. Those who did, they were like, we're going to kill you for this. It's like, it's supposed to be free. What are you talking about? It's a goddamn plugin. And, I'm doing you a favor by using it. These are lawyers and, professors,
Wow.
etc. Right? So very tough, and got a very cold response from whoever I got. There were a few who said, yeah, sure, why not? But yeah, that was very limited. And I spent 2-3 days internalizing all of that, the whole feedback around pricing. And I made up my mind that this is not what I'm going to bet my life on. It has to be something else. It took me some convincing for Ankit because he was very keen on building it out even further. We should do this, we should do that, etc. But it took me some convincing to bring him on the same page and show him the bank statement that we are running out of money as well to fast track that. But yeah, it didn't take me long. I think maybe a month. And we started figuring out what to do next. There were 2 to 3 ideas in our mind that we wanted to try out. Everything clearly was B2B because, with Burr, we had a very terrible outcome, right? And of course, you can blame it on Burr being ahead of time, etc. But, despite the 4-5 years of grind, it wasn't a great commercial success. So we were like, very shy of doing anything B2C. And it's nothing to do with Burp. It's like, it's just timing. So while we had a couple of B2C ideas in mind, but then, both Ankit and I were very sort of clear that it had to be in the B2B space. We have to monetize it from our customers. Whatever we build, customers will have to pay. They have to see value. So that was the guiding principle of, how we decided what we want to do next. One thing led to another. We ended up with WebEngage. And WebEngage, not the WebEngage that you know today, right? So that was the first pivot. Now, the first pivot led us to building a product which, as simple as it sounds, allowed you to throw pop-ups on your website.
Push notifications.
That's right. Push notifications in the form of nudges, interventions on your website. Turns out, that was a large problem. Marketing really, really wanted a better handle on their website, and they wanted to do things. But, websites largely in consumer companies, they're controlled by tech and product. And marketing has absolutely zero say. So with that as the premise, we came up with WebEngage, which basically allowed you to throw pop-up. And these pop-ups were designed to do 2 things. One was in the form of push. Basically, imagine an e-commerce website. You have looked at a product, added to cart. You haven't completed a transaction, and you're trying to move away from the website. With that as the trigger, WebEngage would let you throw something on the website. And that something would contain, a very personalized message to that user who's looking at it, saying if the product belonged to a certain category and was in a certain price range, the marketing team would use that nudge to throw you a discount or a coupon to finish the transaction in the, let's say, next 30 seconds. And some ticker will start, doing tick, 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 tick on the website, luring you into a purchase. That was one thing that the nudges used to do. The second bit that they used to do was to collect information. So a classic case of a high-end or a high-touch website, let's say a commerce website, let's say a furniture website. You're looking at, a sofa or a bed. Back in those days, the transactions for 50,000 rupees, 70,000 rupees, they were not commonplace. So most of these websites, they were designed to collect leads and then, have the sales team follow up. Right. So that's how they were designed to be, which is the other aspect that we facilitated. For the lack of a better term, we used to call it on-site surveys because it was a form builder, allowed you to build any kind of form, collect data, etc. But these are the 2 products that we went to market with. Took us some time to build, etc. But we started seeing good success, early success. Very SMB product. Our ACVs were like $3,000 at that point of time, $3,000. And customers, half of them in the US, another half, well, I mean, not half, but about 40% in India, and the rest was all spread over. Everything was very organically discovered, zero spends on marketing, etc. And as I said, right, the product was priced as SMB. So most customers who were buying us, they didn't even know we were an Indian company. It was all designed like a long tail SaaS product. You find it online, discover online, credit card online, and then the product starts working. The friction to getting the product up and running was also zero. All it required for you to use the product was drop in a pixel, a JavaScript pixel on your website. We made that super simple too. And that's how the journey started, Roshan. And very good journey that we continued on that track for about 4.5 years. And some capital in that journey also. Folks like Rajan, who's now at Sequoia, he used to be Google India head at that point of time. He led the very first angel round that we ever did. And then we raised some follow-on capital from GTI Capital, from Bloom Ventures, Social Cap, a bunch of these guys. So yes, that was a very good phase in our journey. We were doing very, very well. But then we decided to make our lives a little miserable. And the reason being is that we were not able to go deep, Roshan, into our customers. And, back in those days, right, we would count like a Myntra or a Flipkart or a Zabang as our customers. But the kind of money that we'll make from them was immaterial. So it stuck upon me and Ankit that if we are not able to make money from these guys, then who are you going to make money from? And that led to a cycle of discovery of the problem statement in a deeper manner. And the learning was that what we were doing with the pop-ups at that point of time was seen as a in-the-moment conversion tool, which is what it was, to be very honest.
Right.
Marketers, however, were willing to pay a lot of premium, or were struggling with a bigger problem of actually bringing the users back to the web.
Yeah.
And by that time, mobile apps had started becoming commonplace too. So, right, the problem was even more aggravated of how do I get people back, while WebEngage was solving a further downstream problem of how do we convert these. But how do I get most of my people back? Because the problem was that most of them won't come back. And we started sort of building our hypothesis around the product. 2015-16 was that period when this pivot was shaping up. A lot of our own hypotheses and learnings were taking shape. We were transforming it in our own heads as to what we really want to be. And, difficult phase in the journey because we decided to churn customers out on old stack. We started to build the new one with a new go-to-market, higher price point, difficult product because, it takes integrations, etc. to get it up and running. So we were getting in a very different territory. And, as an organization, we were trying to prepare for that. None of that was easy. Finally, on July 16, we launched the product that you see today. What you see today is a much more evolved version from what we launched in July of 16. But that's been our sort of second pivot. And we churned everything on our previous stack. As I said, all our commercial success has been customers on this stack. And we've done well for ourselves in the last 5 years or thereabouts. I'll take a pause here. I've taken a long time, but yeah, that's been the journey.
No, that was amazing to hear. I think, starting off with the Clipper tool and then moving on to, today becoming like a consumer marketing cloud, right? Which is what WebEngage is. This journey also illustrates one very important virtue, which is picking the right problem and the market, right? I think it's critical for entrepreneurs. And although I feel, SaaS entrepreneurs are much smarter these days, and they don't just chase a problem because they think they can have a solution for that. They also have a perspective on, how much someone can pay for it. And if it's a critical problem to solve, just based on your journey itself, right? What are some principles that you would say are integral to picking the right problem and the right market?
That's a very good question, Roshan. I don't know why don't people talk about this quite often. It's a tough one. It's a very tough one because picking problem statements to solve, especially when you're a first-time entrepreneur, it's actually very, very tough. The insights on how to size a market, how to look at an opportunity at large, how to basically define your customer persona right, as much as there is a lot of written material about all this, remains hard as first-time entrepreneurs, right? And people have very little guidance around this. So I'm glad you asked. A lot of what I'll say is always in hindsight, but a few things that really, really matter is I remember my conversation with a fund. I won't name them, but there was a fund that was interested in funding WebClipper, by the way. And funds exist even today. They are in a different name, but they exist even today. Very respected people, good folk. This is even before I had a company and before I had a team. They wanted to invest in the WebClipper idea. And while that didn't happen for many reasons, but I remember the conversation with the partner. We had lunch together and he said a few things. It stays with me even today. So he asked me this eternal question. Avlesh, all this is great. Me being me is always bullish about, always optimist, bullish, right? All founders are. So he said, yeah, all this is great. Who do you think you compete with? And I had done, to be very honest, I had done very little research by that time. I didn't even know what Evernote was. I told you before. So I have absolutely done zero research. What I did was I put something out there and there were 25,000 people using it, right? That's all I knew. And to me, that was exciting enough to believe that we have you have something out there, right? Turns out that's not enough. Now, during my course of conversation with him, he asked me this question. And I said, yeah, well, I haven't looked around enough, but I don't think anybody else is doing it the way I'm doing it, Practically saying that I don't have competition. I didn't say it in as many words, but that's what I alluded towards. And he gave me like a very crooked smile and he said, Avlesh, here is a lesson. You should remember this. As you go in the journey, a lot of people are going to tell you from the investment side, but you should remember, if you don't have competition, you should be scared. And it took me some time to understand what he was trying to say, but it can't be truer. If you really don't have competition, you should be scared, primarily because it's probably not a size of an opportunity which is worth it. If it were, a lot of other people would have jumped onto it several years ago and they would have built companies, large companies. Or there is a possibility that those companies exist, you don't know, which is a matter of you finding and learning about them. Or the world doesn't need it. Somebody might have tried and failed. You talk about failed companies, right, in the space, small companies who were doing this and not being able to get to a point. It's probably because it's not a problem that too many people have, or it's too complex a thing to even think of a solution. A lot of people must have tried and failed because it's not worth it. It's probably just way too complex to solve for, which doesn't even have a sizable mass to use the product for. So all of this put together, what it means is if you don't have competition, there is a problem. It's very tempting for first time entrepreneurs, SaaS or otherwise, people jump onto solutions. I keep talking about this to my team every single day across the board. And it's almost like a guiding principle here at WebEngage is don't obsess over the solution at all. You obsess over the problem. Don't worry about the solutions. There are way too many ways to solve a problem as long as you know this is the problem you want to solve. And while it's all cliched and very easy for me to say, very tough for first-time entrepreneurs to understand and appreciate. I think building a mental framework for your own self as a founder to put this above everything else changes a lot. If somebody had advised me to do it this way, I would have been a different founder. I would have gotten to where we have much more faster, and we could have probably done better and bigger things. But yeah, looking back, this is whoever comes to me for advice, all early stage founders, I ask them to just take a step back, just think about the problem. Think about who faces that problem. Think about what they're doing today to solve it. Often we don't have the right answers. And the trick is to just know these insights. Some of these founders, they have phenomenal degree of insights, right? People like Girish, the reason why they're so successful is not because what Freshness does for products, the amount of capital they raise. Those are all corollaries and byproducts of the amount of insights that he had as a founder. And of course, a lot of it comes back to his prior stint at Zoho. So Zoho being Zoho, right, is the godfather of all of this. But these are insights that are invaluable. There is no price for this. As a founder, the onus is on you to convert this and institutionalize this into building something large. More often than not, people will fail with that too. And I don't have answers to how to fix that because it's very individual, right? It depends on the person, how curious you are. But not having those insights is a disaster. And I see people making that mistake over and over, irrespective of the era that we are in. People will make that mistake. My advice, take a step back, obsess over the problem, find whose problem it is, find what they're doing today, and then start from there.
Right. Yeah, amazing points. Amazing points. Because I think what you're saying is essentially no competition means no market.
It's
right?
terrible to not have a competition.
Terrible to not have, and it's very difficult to execute when you don't
some
think you
products
have
are lucky,
competition.
right? So some products are lucky, Roshan, sorry to butt in, but some products and categories, they're very lucky to actually not have a competition. Browser Stack for the longest period of time didn't have, and a lot of their early growth and traction can be attributed to the fact that they never had a credible competition. It's funny why they did not, but some products are lucky. Some products are lucky that the timing and the category might just be in their favor. Right. But those are absolutely acceptable.
Right. And also the second point that you brought up, which is the founder having some kind of a unique insight about the problem or the market itself makes such a huge difference, right?
It does.
Now, when you started out in SaaS 2010, I think, if you put all of the SaaS entrepreneurs in India together in one room, probably it would fit a, much tinier room than today, right? When B2B SaaS is so hot, literally everyone is investing or founding a company in SaaS today. When you talk to founders today, how do you compare, 2010 with 2020? I'm sure that there is a lot more precedence for us today. I mean, there are so many of these benchmarks, metrics, playbooks available today that founders can leverage. But, fundamentally, what do you see as differences in terms of starting a SaaS company in 2010 versus how we are positioned right now in 2020?
Two big things. I think the founder quality has dramatically improved. And this is not just B2B SaaS, right? This is across the board. You'll find much better talent from people starting businesses to their early teams. It used to be a struggle to build early stage teams back in those days, right? Finding the first 5
B2B
people.
was
it was horrible.
Was not
it
sexy,
was absolutely horrible. It was impossible to find your first 5-10 people who will essentially go on to build what you would want to. These days, it's not a challenge. It's the teams are very smart. Founders are much more sharper, and given how mainstream the growth playbooks have become, not just SaaS, right? A lot of consumer success stories have happened in the last decade. And these are people coming in from both backgrounds. These are people with blends. These are people who've seen consumer scale growth. And these are people who've seen B2B product stories shaping up and all sort of growth playbooks being built around SaaS over the years. Some have been very candidly sharing their own data and insights, right? For these people to, build on top of. That has dramatically improved the quality of founders now trying to build SaaS opportunities. I've seen that firsthand. One drastic change is that a lot of these folks are growth first mindset. The old economy people, they were, let's figure out the product, let's figure out the fit. These guys think growth first, and everything has its own pros and cons. I don't want to get into that, but it's wonderful to see that these guys are designing for scale from day one, targeting a very large customer segment, going with a very clear thesis of who they want to go after, instead of building, brick by brick. They go with a very growth mindset, right? Then a lot of these new age founders trying to build SaaS, especially micro SaaS in India, phenomenal. It's phenomenal how they think. So yes, that's been a sea change. Capital has been the other one, right? There's a lot of early stage as well as growth capital now. At one point of time, there was a lot of early stage SaaS capital. There was absolutely nothing for late stage or growth stage. Across the spectrum, capital is available. That makes for a great combination, right? For the next decade, I think we will have incredible SaaS companies coming out of India. We like to tag unicorns as a success metric, but yeah, we will have phenomenal companies coming out of India in the next decade, building SaaS not only for America, which is what we've done all these years. You will see SaaS for India, you will see SaaS for Asia, you will see SaaS for emerging markets, all coming out of from India, and very high growth and scaled companies. I'm particularly confident that this will happen.
Right. So at the heart of the SaaS success story is the fact that you can build in India and sell to the world, right? And today, in fact, I mean, people are going global from day one itself, right? I mean, they're not doing the whole India, Southeast Asia, US or Europe kind of a journey, right? WebEngage being one of the early pioneers of this, phenomena, right? Where you said like 50% of your customers were already based in the US or out of India, basically. What are some principles for building for the world?
Good question, Roshan. But I think different market, they have different challenges. And the question is a little difficult for me to answer because the answer drastically changes depending on the kind of product category you're in.
Right, SMB or enterprise or something.
Number one, and the markets that you're targeting. A combination of those will have actually many diversions to these answers. It's not like a one magic silver bullet that will work for everybody. What's the common denominator is the fact that the product has to just work. Today it's hygiene, right? Gone are those days when you used to say B2B SaaS, it's okay, even if it doesn't look nice, it's not fancy, doesn't have a few features here and there, it's fine, right? We'll build it out, we'll test it out. The customer is become demanding, one, because there are products now available in each category which meet that basic consumer demand and solves the basic problem that they're facing. So today, unless you have found a very strong niche, a very, very strong niche in the category that you're operating, you can still get away with a product that's still not there in terms of your larger vision. You can go with a much lesser product than an MVP and start building your hypothesis out, find early customers, adopters, etc. Those are again exceptions. The basic norm now is your product has to just work and has to be better than what's available out there to start finding inroads. This has changed in B2B software. It wasn't the case earlier. You could have gone in with a slightly suboptimal product and continued to co-build with customers. Today, it's harder. It's much more harder.
Yeah.
Now, depending on whether you're building an SMB product or a mid-market enterprise product, the go-to-markets are very, very different. Anything which is SMB, you can sell from anywhere to anywhere. That was true 10 years ago. That's true even today. There's nothing stopping you from going and selling in any markets because SMB products, practically you don't need to sell. People just buy. All you have to do is create a lot of demand. Either the demand is already there and you're in a very large category, you continue to see this, right? Support ticketing, help desk chat, project management. All these are very large categories where some large companies have been built. You can go build yet another project management tool. The only way you're going to get traction is have a very clearly defined GTM. And the product has to be better than, let's say, a Basecamp or a Jira. Right. Now, when you zoom in and change that to a more mid-market enterprise, then you start having problems. Then you start realizing that it's not the same playbook. It's a different playbook. And, the playbooks are evolving because this has not been done at scale in many categories in the past. Some categories, yes, some not. Now, if you zoom in, right, what an Innovator does versus what a WebEngage does, or what let's say Manthan has some SaaS products, and I can go on taking names, right? What a Postman is versus what other products are. All these are very different categories. Each have their own way of finding the right segment of users they want to go after. Invariably, a lot of demand comes from the US for these products, and Asia and other markets, they're still in their infancy in terms of SaaS adoption, in terms of the size of SaaS opportunities. But it's become common wisdom that SaaS companies can be built with Asia as the focus, emerging markets as the focus, Latin America as the focus, etc. It's now becoming common wisdom, which wasn't the case earlier. So no matter what you build, you had to go sell to the American customer for you to build something large. Today, that's not the case. depending on the product category and the competitive landscape that you're operating. So it's a much more complex call now for mid-market enterprise as it used to be. Earlier, there used to be only one way out. No matter what B2B SaaS product you're building, you have to go sell to the American customer. Otherwise, it's not going to be large. Today, that's not the case. It's the statement is not that simple. US continues to be the largest ever market, and I don't think that's ever going to change. But the opportunity in some of these other markets is it continues to shape up. And companies like us, we are tying our fate to that. Still early days of that evolution, but today, when I said we had 50% US, this was the previous product, which was SMB. We didn't have a sales team, we didn't have a support team. The people used to use the product out of the box. Today, it's a long cycle from selling to servicing. Everything takes time. It's very high touch, right? So we are not talking about scale of 10,000 customers. The day we have 1,000 customers, we'll be $100 million business, right? We're talking about that scale. So it's the way you approach your go-to-market in each of these cases changes. And I think, founders who get to that point of taking a call should assess the opportunity and the competitive landscape before they decide which markets they want to operate in. The SMB mid-market enterprise playbooks are very different. And when you add your competitive landscape and the product category that you're operating in, a combination of all this has to be used for you to decide what's the opportunity that you're going after, which is the market that you're going after. If India is a large enough opportunity for you, you're an Indian founder and you think you can build $100 million business in this country by selling to, let's say, SMBs or selling to enterprises, so great. Just because it's fancy to sell to Americans doesn't mean that you have to. It's your own playbook. Right. But having a very informed view about these opportunities is very, very important. A lot of people go wrong there too.
Yeah. No, I think that's certainly an interesting point, right? If you look at how much of the enterprise tech stack is yet to SaaSify, there's a lot of headroom. That's and right. At the same time, COVID has sort of acted as an accelerant for a lot of these technologies as well, right?
Absolutely. Fully agree on both counts, right?
Yeah.
In fact, Zoho is a very long tail SMB tool, right? Product suite of very small, I don't know, like some 200 odd products, maybe more. They have sizable chunk of revenues from India now. It's the second biggest market is what I read. And it's incredible, right? For a company like Zoho, you would never have imagined at the scale of a Zoho, right? You're talking about $500 million of revenue. That's a very significant number.
Yeah. So, WebEngage has lasted for over 10 years. And that's very, very significant, I would say, right? And what are your thoughts on building a sustainable business? Because, you're still taking a fresh approach to your problems, the things that you're solving for. And how much of this was influenced by the fact that, you did not raise a lot of capital in the early days, right? Because, today I kind of worry that, we are trying to force fit a lot of startups into this mold, today get to a 1 million and then do that 3x, 3x, 2x, 2x, 2x and stuff, right? And just general thoughts on how do people build decadal businesses?
To each their own, Roshan. I think there is no one way of building a business. Someone wise told me this from the venture capital community about 10 years ago. Very good friend of mine, and took me a long time to realize this when I had to go through this firsthand. But yes, there is no one way of building a business. It's each founder, right, has certain way of looking at what they want to do. And, I wouldn't want to slap them. It used to be very sort of fashionable to call businesses as lifestyle and
bootstrapping versus funding.
Right. Yeah. Lifestyle was the term that was used, right? This is a lifestyle business. And some good businesses were called lifestyle back in those days because it was fashionable to do so. But the moot point is capital is a tool to build a business. If you're the founder who can do it without capital, you should do it without capital. Nobody in this world will ever come and tell you that you should build a large company by taking capital if you can. Turns out it's hard, right? Turns out it's very hard because capital helps you accelerate a lot of things. Capital helps you, it's not a moat in a business, but yes, it does cut down on the timeline, helps you experiment faster, come to hypothesis faster, come to decisions faster, and focus on things that really matter. When you don't have the luxury of capital, then you're much more slower. It's harder. But my own lesson in this has been that building a business and raising capital, these are two different things. These are absolutely two different things. They help each other, complementary, of course, but they can be done independently, is what I have learned. You can build a very large business. It's not a function of how much can you raise. In B2B, software, right? Where the job is not about creating markets, is basically to look at an existing market opportunity and go get the max share, go win in that. Consumer is different, right? So in B2B context, you don't necessarily need to raise a lot of capital if you're very disciplined about how you want to build your business. And some of the most iconic businesses, they were just built without raising capital, right? People like GitHub, people like Basecamp, they never had to. Mailchimp, etc., right? They're huge businesses. Everybody who tried to raise hundreds of millions of dollars trying to build a Mailchimp couldn't even get close to that, right?
Yeah.
Those are exceptions again, they're not norms. But the point being is that founders who come to me for advice and founders who believe that there is a way to build a business, figuring out your market first, figuring out your customer first, and then figuring out growth, with that approach, you won't need a lot of capital to begin with. You will need capital to scale. Every business will need capital to scale. But in that phase of the journey where discovering the problem, it wouldn't need much. However, if you're very growth centric in terms of how you want to build the business, you will start with capital first, because growth is the first problem you're solving for, right? Everything else is secondary. So again, without trying to label one as right or other one as wrong, or giving them any sort of labels like lifestyle or otherwise, it's a very unique call for that founder who's trying to do this, because end of the day, it's their choice of how they want to build their business. Capital is a tool. You have to return capital. How much you want to consume and how much you want to return essentially mandates or determines how you are building that business, right? And no two business are the same, even though they may be exactly doing the same thing, selling to the same customer, but they're not. So yes, to each their own. That's the short summary as far as I'm concerned.
No, I think the nuance that you're trying to bring out is between raising capital and deploying capital, I think, right? I mean, because how do you use the capital to sort of like flame that spark, right? I mean, to that, I mean, you need to have a spark at least. You need to have a kernel of something that's working so that you can get there faster, basically.
That's what I would want to believe. So unless you've hit that point, right? Unless you exactly know that this is working, and now capital is a growth tool, raise as much as is available and do that.
Right. So we've spoken plenty about building businesses. On that note, I have to ask about startup program that you've started, right? So, what is the idea behind it? Is it, to give back to the ecosystem, which is amazing? And, what can startups expect from the WebEngage startup program?
Thanks for bringing it up. It's been a phenomenal, I hate to use the term, but it's a phenomenal growth engine. I was using the term growth hack, but I avoided it. I ended up using it anyway. But it was a great growth tool for us in the last year or thereabouts. And so I'll tell you what we did and why we did it. The journey I explained you, right? Today, mid-market, so WebEngage is all a mid-market tool, right? So our customers are mid-sized customers. Now we're starting to sell to enterprises also, right? So we count folks like Unilever, folks like, Adani, folks like Adani the group, and then, Bajaj Auto Finance, etc. We have a bunch of these enterprise guys now, which is starting to shape up. All throughout, our focus was mid-market and enterprise. This is what we wanted to do in our journey. And we are because we're a mid-market tool, the SaaS product is not built for you to, select a product tier, pricing tier, put your credit card on file and start using the product. We're not that product, right? Yeah. You come to us, you talk to us, we give you a demo, we find out what you're doing today, we solutionize our product, we tell you how we can do better, etc. And then ultimately, finally win the deal, or in some cases lose the deal. This is our typical sort of customer acquisition cycle. In that cycle, when the small guy would come, early stage companies, we are designed for B2C companies, right? So 100% of our customers are consumer companies. We only sell to B2B companies. And when some of these early stage companies would come, very small companies, we had to invariably turn them down. We had to tell them, you're too small, just go and do this. You should go and do that. You shouldn't waste time with us because it's not worth it. The reason why we used to do that, Roshan, was, and we continue to do that, by the way. Now, we don't tell them go somewhere else. We tell them go and take a look at the startup program and see if it's fit for you. But we still don't sell to them. And the reason why we don't is because in early stage companies, your first problem that you're solving is customer acquisition. Everything about WebEngage hovers around customer retention. We do, data analytics, we do campaign-led engagement, we do web and app personalization. All of this is about retaining what you have, converting your current customer base, converting your acquired customers, and retaining the customer. This is the entire scope of what we do. We can't go bring new customers for you. You have to find them. We can't go find customers. So in that early stage setup, your first order problem is always to find new users. Retention is a very second order problem. If you don't even have users, who are you going to retain in the very first place, right? So even if I manage to sell the tool to you, we'll not be able to retain you because you'll stop seeing value in some time. Whatever little you are spending on WebEngage, you say, you know what, I'll go spend a little bit on Google only, right? And get a few more users before I did any of this, right?
It's a second order problem, basically.
Very second order, right? So given all of this, we never sold to these set of customers. And slowly over a period of time, our realization was that a lot of these companies, well, some of them for sure, will go on to become very large very quickly. That's the nature of the consumer business, right? Those who catch fire, they actually catch it very quickly and they just become large. When they become large, they become harder for us to acquire. The problem just aggravates, right? It was much more simpler for us to get them when they were early, but then they wouldn't have seen value, we would have lost them, right? All these problems. And if some of these guys would have grown, they would have stayed with us and grown. We would have grown with them too. Our thinking around the startup program stemmed from this fact. We knew from day one that we didn't want to build yet another free credit program. I mean, you without discrediting the AWS program or anybody else who does it, right? Almost every software company in the world will throw away free credits in the name of startup program, right? They'll call it something else, but they'll give you free credits. And for AWS, it works very well because it's an infrastructure problem they're solving. But support tools doing this, marketing tools doing this, right? It's very commonplace. We didn't want to do that as our core promise because we knew the value for that is zero. Like, there are so many out there and nobody does anything. We started with what value are we going to provide to these guys? One, we knew these are early stage. They don't have money. They don't have bandwidth. They don't have the skills and resources and the chops to actually deploy and making tools like this work. WebEngage tools are, these are complex tools, right? We talk about a lot of data, a lot of analytics before you can do engagement, right? These are complex things. Most of these people, they're very early and they don't have the mindshare or the bandwidth to give to tools like that. Integrations are complex. It's not that I give you the tool and tomorrow it starts working for you, right? You have to integrate it with your apps and with your websites and with your CRM for WebEngage to even provide anything meaningful to you. That takes time, which these people don't have. So what we said was, we'll design a program. We'll solve for this basic thing. We'll give them a ready-made event registry, data registry. Your e-commerce, these are 10 things you should do. Your edtech, this is 10 things you should do. Fintech, so on, D2C, so on and so forth, right? And we started building these competencies in-house. We started taking charge of integrations in a templated manner so that you can do in a click manner. And within a week, the product is ready for you to use. In a templated version, it's not, it doesn't give you all the bells and whistles that comes with WebEngage, but the 50% product is up and running for you and good enough for people in those stages. And to top it up, what we did was we said, the product is going to come to you for free for the course of the program, which is 6 months. So you don't have to pay for the product. And we'll also give you ready-made templates, which are presentation templates of your growth data. How's my acquisition looking like, retention looking like, what is my day 10, day 20, day 30 repeat. We templatized all this on the data that we already have from you and gave you in a very presentable format, which is like a growth deck. You could just share with your investors directly. The idea behind doing this, Roshan, the core idea was, because we work with consumer tech companies mostly, the idea was to get them to growth path very quickly, get the plumbing on the growth layer sorted so that they don't reinvent the wheel, and in some cases get them to their next round faster. We made these as our problem statements. There was a team which was built internally which started solving for these. Early on, there's a lot of cynicism and skepticism around these kind of programs. So it was harder for us to find a few early adopters. But kind of evangelism we have gotten through that program is insane, because these people who we had in the first lot, in the first cohort, they saw the value. And now it's a thing, right? We have more than we can potentially take. Now it's, we have to turn few people away because, there's a lot of effort in doing this. Hopefully, we can scale this up even further, and we'll able to, accommodate as many startups as we can. Because yes, in many ways, we want all these startups to be successful. We have, of course, our commercial interest tied to their success, but in a way, we really want them to be successful. And this is way of us giving back to the startup community in general.
Yeah. No, I think this is invaluable, because I think if you look at early teams, all of this is a luxury for them, right? Setting up all of these things, because usually, it will come at the founder's time itself, and founder's time is so limited, right? Between acquiring customers or perhaps fundraising and doing other things, right? Can you talk about a couple of examples of startups who have really experienced this and have kind of scaled?
My favorites, because I know the founders personally in those cases, seen their journey. So yeah, two that come to my mind. One is FamPay from the previous cohort. They're a payment app for
teenagers,
for kids, for teenagers, for teens. And we've seen their journey. They've raised tons of capital throughout. We got them on board in very early days of their cycle. They're building the whole stack around how do we drive repeat behavior, right? That was a very simple problem statement that they wanted to start with. And while it is very simple, but it is very powerful. Because because for a tool like WebEngage, it actually makes that happen for you. We many examples across our customer base where we have improved repeats by 50 to 60% in depending on categories, etc. Right? So that's a huge boost in your business without you having to invest further into these customers that already belong to you. So we started solving for that problem, and then set up the whole stack. Now they do a bunch of things, but we've seen their growth, and I would want to believe that the startup program was instrumental in helping up build their growth stack. The other company is a very high impact company called Fool, Phool. Fool is flower in Hindi. And they have a very kind of unique business model. What they do is they go and acquire flower waste from temples all over India, mostly in tier 2, 3 cities. And they process that, and then they build goods. They build goods from that processed waste in the form of, let's say, candles or incense sticks, etc. And they have a phenomenal growth story again on top of driving repeat behavior with these existing customers, and selling them more and more because they have too many goods for you to sell. And the products, they are they fall in the category where you have to replenish. No matter what you buy incense sticks, you'll continue to buy again if you like the product. And we help them in building this growth stack, driving that repeat behavior again in their existing customer base. But yeah, because I find that personally very impactful. I've seen the amount of waste that gets generated in all this temple, and everything apart, it's just a major hygiene issue, right, in those temples for the kind of footfalls they get, right? Some of the major temples, the kind of footfalls they get. So it's a very wonderful problem they are solving, and I'm pretty proud that in both these companies and many more like these, we have been instrumental in helping them grow fast.
Fantastic. So I know we're at the top of the hour. So to wind down the podcast, what do you have coming up at WebEngage? And for young entrepreneurs who are listening to the podcast, right, what is your 3-point advice on what they should be doing?
To the first question, WebEngage, very exciting days ahead. We're going to be the very first marketing cloud in the truest sense, which solves data across data layer, solves problems across the data layer, analytics layer, engagement layer, personalization layer. Will be the first product in our category building this for the mid-market customer with the usability of a DIY tool, right? A lot of that is happening. Exciting days ahead. So currently, heads down getting the product out, and I'll keep you guys posted on how that shapes up. We are betting big and hoping that we can build a large company with Indian credentials and selling to emerging markets all over the world. That's the thesis with which we are building this company with. Hopefully, we'll get there someday. Now, on the second bit about advice to entrepreneurs, I'll go back to how where I originally started the podcast with was, first, please obsess over the problem. Try and find out what's the pain, who is the guy who's pained, how deep that pain is, and what they're doing today. If somebody has a pain, they're not sitting idle. We make that mistake, right? They're doing something. It might be hard to comprehend, but if you find out, you'll be enlightened like anything. Find out what people are doing today. Find out what the problem really is, and then you go from there. Then it's much more easier to slot saying, I understood this guy's problem. There are probably 10,000 like this. There are 100,000 like this. Maybe there are only 5 like this, right? You'll know better. But start with that, right? Obsess over the problem and find out everything that you can about whose problem it is and what they're doing today. Always advice number 1 that I give to anybody. MVP is a very abused term today. I think, while of course MVP is important, but the second bit that I spoke about is having very clearly differentiated products have a much better GTM. It's very difficult in crowded markets. It's very difficult in commodity tools. So it's easier for me to say, go build a better project management tool. No, it's very hard to build one because everything that needs to be done has been done. Right? So it's, and some guys, they are super excellent at it. But once in a while, there'll always be a Slack that comes and proclaims to be better, right? And gets all the attention and hype that it needs. So yes, there is always room to do things differently. In more competitive categories and more crowded categories and more commodity categories, it's very important for you to find that product differentiation and invest a lot of time in doing that. It always helps. If you're in a blue ocean, then you can overlook that thing. The last bit is what you touched upon in terms of choices of raising capital. Again, very personal choice. So I don't want to tell you whether you should or you shouldn't, how much and etc. But what you should definitely do is not get carried away by what everybody else is. It's your own. You will find your own path. You will find your own journey. There is so much noise out there. Filter it out for yourself. Not everything that you read or hear is gold, including what I'm telling you on this podcast too, right? So please be yourself, do your own thing, and spend time thinking what you really want to do before you go or berserk.
All right. That's a great note to end the podcast on. This was a fantastic conversation, Avlesh. Thank you so much for being on the podcast again, and all the very best for everything that you have coming up.
Been a pleasure talking to you, Roshan. We've done this for the first time. And in fact, I've done it after a very long time. Sid was the guy I spoke to last, which was a few weeks ago. But before that, I've taken like a good 3-4 year break before getting into this mode. And thanks to Anand who insisted that I should do this. But it's been an absolute pleasure talking to you. Please be in touch. Thank you. And good luck to the audience.
Thank you.
Thank you so much for listening. If you liked this episode, then don't forget to subscribe to us on your favorite platform and share this episode with all of your fellow startup operators. Also, follow the Startup Operator on LinkedIn and Twitter for more updates. Stay safe, take care, and see you soon on a brand new episode of the Startup Operator.